Hey guys, welcome back to the channel. I hope you're well. It's Friday, so another video, and I hope you've had an amazing week. So you've looked at the title of today's video, so you know what we're going to talk about. I'm going to basically talk you through a number of stock that I'm looking to add to my investment portfolio in Trading 212, because I know that is something that a lot of people are now using. And I obviously did a review on Trading 212 as well, and I do hold one stock in Trading 212. So I wanted to do this video to give you guys a little bit of an insight and hopefully get you guys to learn something. But before we get into the meat and bones of it, a little bit of an admission. I was very reticent to make this video for a couple of reasons. Firstly, there is a lot of content like this on YouTube right now, and I don't necessarily want to be adding to the echo chamber, producing the same content as everybody else. I want to kind of just stand out. Secondly, when I see videos that say stocks to buy now if you want to make money, for me, my professional opinion makes me wince because it's a dangerous notion. And it's a dangerous notion because if you follow me here on the channel, you watch some of my videos, or you listen to the podcast, or you follow me on IG, you'll know that I talk a lot about content and context. And oftentimes when I've watched these videos, it's still very, very high level information, and you don't get the full context, and the context is important. The devil is in the detail. And unless you know the detail, you know the nuances, you don't really understand what you're getting into. And beyond that, buying stocks isn't just about share prices. It isn't just about potential future growth. It isn't just about balance sheet. It is also about making sure that your money's safe. It's also about making sure that you're diversifying your risk, regardless of what risk appetite you have. You might be a 10 out of 10. You still have some risk management in there to do. So I didn't want to do this kind of video for those two reasons. But the second reason is actually why I am making this video, because I know that a lot of people are using Trading 212, free trade, and they are looking at companies that they're purchasing, and they are watching these videos that don't give you the full context. So I'm hoping that by showing you a couple of stocks that I'm looking at adding to my portfolio, that you'll understand what I'm looking for, why I'm buying, what I'm looking at, and hopefully you'll be able to adopt some of that into your own process. And I'm going to explain to you the questions that I'm asking, the kind of train of thought that I'm thinking of when I'm purchasing this company. Again, it's not just about stock price. That's a big, big mistake to make. So as always, and particularly with this video, there is a disclaimer, and it's a very, very clear disclaimer. Please do not take any of what I'm about to say as financial advice. I do not know your personal circumstances, so I cannot say purchase this stock or purchase that stock, because it would be wrong of me to do so. What you can do though is use this video as a basis to do further research, to validate your thinking, to negate your thinking. Use it as a critical thinking piece. You can use this as a springboard to enhance your knowledge and help you make better decisions. So with that said, let's jump into my account on Trading 212, and I'm going to talk you through the stock that I'm looking at to add to my portfolio. Okay guys, so we're logging into my Trading 212 account right now. This is my portfolio. Well, this is my account, not my portfolio, because I don't hold all of these companies. These are companies that I'm literally just watching. They're on my watch list right now, and including the three that I'm going to talk to you about today. Now, on my account, let's just go home. I hold my Facebook shares here. So obviously I did a review of Trading 212 maybe 2 or 3 months ago, and I funded this account back then because I just wanted to kind of test what it was like as a user, to test the user experience and understand how easy it is to transfer money in, to transfer money out. I've since purchased Facebook shares in this account, and that's what you're looking at right now. So I'm down just over 2% right now on my initial investment, but that's all I hold. In reality, I actually use Hargreaves Lansdown. That's where I hold my Tesla, my Walt Disney, and the other bits and pieces that I hold. One thing I will say at this point is, Hargreaves Lansdown is great. I've always used them. However, there are certain nuances and differences between the two that are important, and I thought I'd just explain some of those now because I know I've had this question in the past as well. Which one's better, Pete? I think they both serve different purposes. So with Hargreaves Lansdown, the research they provide you, the emails that you get, all very, very good. However, with Hargreaves Lansdown, you have to pay £12.50 per trade. So it's not free. Trading 212 is free, and that's one of the big draws for first-time investors. The fact that you can, start investing in these companies and it doesn't cost you any additional fees on top. With Hargreaves Lansdown, you pay a fee. You've got to be okay with that, which I am for my holdings there. The second thing about Hargreaves Lansdown is that you can't buy fractional shares. So you've got to buy one whole share. And if you look at Tesla, for example, the Tesla share price right now is, what is the Tesla share price? The Tesla share price right now is $1,593.28. So with Hargreaves Lansdown, you need to have $1,593.28 to get one share. That's a pretty big barrier to entry for most first-time investors. So trading 212 is attractive because you can buy a piece of Tesla. You can buy £20 worth of Tesla. You can buy £50 worth of Amazon, for example. You can invest fractionally, and that's a really, really big draw. The same is also true with Hargreaves Lansdown in the fact that you can't liquidate partial shares. So if you have 3 shares, you can't, sell 1.5 shares. You've got to sell either 1, 2, or all 3 of your shares. Whereas with Hargreaves Lansdown, it doesn't really matter because you're buying fractionally. You can also dispose of them fractionally as well. But anyway, this is my Trading 212 account. This is just a list of stock that I'm looking at right now. And on this list are the 3 that I'm potentially looking at adding to my portfolio. Once I decide what I'm going to do, I will likely fund it through Trading 212. So I'll add another £500 into this and allocate money to these 3 stocks that I'm going to talk you through in a moment. So they are the top 3 on the screen: Intech Palmer, Regeneron, and Nvidia. Basically, those are the 3. So let's have a look at Intech Palmer first and foremost. So looking at this, the share price is pretty low, right? 53 cents for a share. It means if I go and allocate, £100 into this, I'm picking up quite a few shares all in one go. But it's really important to acknowledge that when you're investing in companies, it's not just about the share price, right? Often people think it is, and it's not. It's not about the share price right now. The share price is only an indication of how well the company has done. It's a snapshot of the company's value in this moment. Unless you're day trading, if you're looking to invest in these companies and hold for a while, you're investing for future value. So the share price today is important. Are you getting a good deal? Are you, buying something that's overvalued? It's important for that. However, you are trying to establish what the future value of this stock might be from where it is now. And that's the crucial point. So whilst it's very, very attractive to look at Intech Palmer and thinking, well, actually, I can pick up quite a few shares in here, there's a lot more that goes into this. So one thing that Trading 212 do that is great is they provide you company details. I do look at this and I do research the company. So Intech Palmer is an Israel-based drug development company. Now, what these guys basically do is they are developing a new delivery system for when people take pills or drugs effectively. They call it the accordion capsule. So what they're trying to do is they're trying to change the way medicine or pills are administered, and they're trying to improve how the body assimilates the medications in cases of things like Parkinson's disease, so on and so forth. I've done a lot of research on the company in terms of what the capsule looks like, their medical applications, where they've got clinical trials, and they've got about 3 clinical trials at the moment. Parkinson's disease is actually quite advanced in terms of the clinical trials they've got going on there. There is rumor that once they get past stage 3, then they should all be ready to have their system basically approved, and that bodes well for the business. So for me, I look at the company details. The company details are really, really important because they give you a snapshot of what the company's all about. What I typically then do is I will then go and do further research either on YouTube find their website, download some research papers, and get to know exactly what it is that they're doing. In the case of Intech Palmer, if they get this right and their system is effective in the treatment of Parkinson's disease, then believe me, the share price is going to rocket. But it is still early days. So in terms of what is the company trying to achieve? What is it that they do? What are they developing? Is there a space in the market for it? The answer is yes. Anything that improves health is always going to be able to sell, is always going to sell, because guess what? We value our health so highly. So anything that improves health is a good thing. And at this point in time, when these guys are looking at Parkinson's disease in particular, there are two other areas that they're working as well, but I'm focusing on Parkinson's disease for the purpose of this video, then you can say that actually they have a pretty good product, and the clinical trials are really spewing out some great results as well. So that's always encouraging. But again, that piece of information isn't found here in the company details. You have to do further research on that. So let's have a look at the company. You've got the CEO name here, you've got headquarters, you've got the sector, you've got the industry, you've got the market cap. So $91.53 million is the market cap. Relatively low for a company, to be honest, but they are relatively new, so it's not that big. Now, there is no PE ratio, so profit to earnings ratio. There isn't one. Revenue, there isn't one. Earnings per share, it's a minus right now. So there is no dividend yield. So this is really important in terms of financials, but you've got to remember these guys are developing products, so they are not yet in the market. The value for this company, I believe, will come if they launch a product that is approved by the FDA in the States and is actually approved via clinical trials, and they actually go to market and people can actually buy the drug. That's where you'll see that the value of this company will increase. But I do also have a look at, the financial summaries. This is important, particularly for established businesses, and things like the balance sheets are important. So the income statement, they're at a loss right now, a loss of $47.6 million. Now, that would be a bad thing, but these guys are developing something new. So whilst that is worthy of note, you've got to bear in mind they don't have a product yet. They are still developing. They're still in clinical trials. That requires cash. So they are burning through cash right now. Their balance sheet, well, total assets, 21.28 million. Total liabilities, 9.7 million. So when we talk about liabilities are things that they owe. So this is money that they owe or things that they owe externally. So, 9.7 million in relation to the ratio compared to their assets is 45.7%. Some could argue that that is a high number, but again, they're only just starting out. They're only just, researching and doing clinical trials. So for me, that's not necessarily something that's going to put me off. I'm more interested in the ability and the applications that their product is going to have in the future, and whether it's worthwhile me taking a punt on them for this. You've got a cash flow chart here. So operating, obviously they're spending a lot of money, so they burnt through 29 million pounds. They're investing 3.2 million. They're financing 2.3 million at this point in time. These numbers are important, very, very important, but they're not the end all be all. So for me, looking at this company, I would buy this stock purely because they have a product that could potentially add a lot of value and deliver great results to people who are suffering from a disease. And if we put so much value on our health, then this stock, if they put out a product that actually changes lives and improves the experience of Parkinson's disease for people, then there will be value in this business. And that would be one of the reasons why I would buy them. The second stock that I'm looking at is Regeneron. Now, Regeneron is a pharmaceutical company. It's more of an established business, as you can see here. The share price is $637 a share. So pretty high in terms of the share price. But if you look at the chart here, just going back 1 year, they've grown enormously. So, back, when was this? This is September 2019. They were $292. Ththese guys have been spoken a lot about on various financial news channels, certainly in the States. So who are they? They are the pharmaceutical industry company. They're a biopharmaceutical company that discovers, invents, develops, manufactures, and commercializes medicines for the treatment of serious medical conditions. Why am I looking at these guys? They started trials for a COVID-19 vaccine back on the 11th of June this year. So if they are one of the companies that develop a vaccine, then you can clearly see that the share price is going to skyrocket. Now, the trouble that you have with these guys is competition. So AstraZeneca, GlaxoSmithKline, they will have other people globally, certainly in the United States, that are also working towards a COVID vaccine. And oftentimes with this kind of thing, it's who gets to market first. So this is a little bit of a gamble. Yes, it's an established company, and you would hope that a lot of the value isn't purely lying in the fact that they might develop a COVID-19 vaccine. And I guess by the chart, you could argue that maybe the value isn't solely dependent on that. But if they were to be one of the companies that came out with the vaccine first, then their share price would certainly rocket. And just reading a little bit further about these guys, they are spoken very, very highly about when it comes to things like technologies that they're developing. So it's not just about COVID-19, it's also about what other things are they actually producing as well that have applications in the pharmaceutical or medical field. And that's what I'm looking at. So when you look at further details here about the company, you just need to have a little look at what they do. The company commercializes medicines for eye diseases, high low density lipoprotein, LDL, cholesterol, and an inflammatory condition, and have products candidates in development in other areas, including rheumatoid arthritis, asthma, atopic dermatitis, pain, cancer, and infectious diseases. So these guys are working on not just the COVID-19 vaccine, but a ton of other products that can help with a range of other medical conditions. So this, for me, gives me an idea of the direction of the business, what they're looking to develop, what products they might have going forward. For these guys, they will have competition. But just reading a little bit more about these guys on Google and the websites and watching some of the financial news, they are spoken very, very highly of by a lot of the experts and people who are picking stocks professionally for investment houses. So that gives a little bit of confidence. That gives me a little bit of comfort into why I should actually buy this company. Now, obviously, you got the details here. CEO, number of employees, 8,100, where they're based, biotechnology and drugs. So market cap, 67.39 billion. So really, really big company. PE ratios, profit earnings ratio, 35.65. That's pretty good. Revenue, 7.86 billion. Earnings per share, $18.46. They don't have a dividend yields, but actually those numbers are pretty good. Let's have a look at the financials. So revenue, 7.86 billion. Net income, 2.12 billion. So net, they're actually making really, really good profits. Their profit margin is 26.91%. That's pretty decent for a company. So balance sheet, total assets, 14.81 billion. Total liabilities, 3.72 billion. These guys are not highly leveraged. 25% leverage. That's pretty good in terms of what they owe in terms of debt and assets they actually hold as a business. So those numbers do give me a little bit of comfort. Cash flow, operating 2.43 billion, investing 2 billion, financing 252 million. So these are good. And the great thing about Trading 212 is you can actually go into further details with them as well. So if I go back up here, you can have a look at all of the ratios. So you can look at the current price, you can look at the beta, you can look at the highs and the lows over a 52-week period. So in the last 52 weeks, the lowest point was $271. It's now trading for $664. So you can see how much growth they've had over that period of time as well. You can see the high day, you can see the low day. So you can establish how quickly the share price has accelerated within a short period of time. And what the question that I'll be asking is why? So again, in my research, I'm looking for anything in the news about what they've done that might have caused their share price to increase at such a value? Is it purely on COVID? Or is there something else in the background that has driven that? The more factors you can find, the better, in my view. You can see the price changes in here, which is always very, very good. You can see the per share data. You can see the management effectiveness. These are all things that are worthwhile you watching. I'm just going through the very, very basics that I look out for when looking at these companies. The third company that I'm going to talk you through, and this is the final one, it's Nvidia. Now, Nvidia, they are a corporation. They focus on personal computer, so PC graphics, graphics processing, GPU, and also artificial intelligence. The reason why these guys are on my radar is because I have, again, heard a number of analysts talk very, very highly about these guys. And these guys have actually signed a contract with Mercedes to provide components to their fully autonomized vehicles. The contract starts in 2024. Now, I know a little bit about cars, electric vehicles, full self-driving, because obviously I own a Tesla and I follow that technology quite closely. Now, one thing that I always bear in mind when I look at this sector specifically, and when I look at people like BMW and Mercedes, is Mercedes has always been the thought leader when it comes to vehicles. Historically, they always brought out a vehicle that kind of trailblazed for everybody else in terms of the standard that they needed to meet. So if these guys are signing a contract with Mercedes to provide components for full self-driving vehicles, then if Mercedes' reputation is anything to go by, it's going to be a very, very good car and likely to be very, very successful. And if they have a part in that success, I think they might be a punt. The share price is pretty high, $417 a share. But even if I go back over a year, we can see that actually that share price has increased quite significantly over the last 12 months. And I'm looking at the reasons why that is, again, because it's really, really important to understand why the share price has increased within a short period of time from $165 in August to $417 right now. That's quite a significant jump. But looking at the company information, there's 13,775 employees. They're based in the UK, industry semiconductors. You can see their market cap is huge, $250 million. You know, it's massive. Oh, $250 billion even. It's massive. Their PE ratio, 91.54. Revenue, 10.92 billion. Earnings per share, $4.59. Dividend yield, 0.15. You look at their financials here, revenue 10.92, net income 2.8. So again, their profit margin is around about 25% a quarter, which is pretty good for a business, really is pretty good. Balance sheet, 17.3 billion. Total assets, total liabilities, 5.11 billion. So again, with these guys, they are leveraged to about 29.52%. It's not bad for a company, to be honest, because most companies will have debt. I would be concerned if they were leveraged up to about 70, 80%, because then the argument is, are you really pulling in enough to cover your liabilities? It's like simple budgeting, basically, guys. So those are the kind of things. So again, cash flow you can see in there. Financing, 792 million. Investing, 6.14 billion. Operating, 4.76 billion. This is just their cash flow, money in, money out. This gives you an idea of where their cash basically goes. But again, I'd be curious a little bit about why the stock price has surged so much in the last 12 months. Again, I would probably have a look at that in all ratios just to see what the dates are, what the highs are, and just go through these little tabs here. But these are 3 stocks that I'm looking at possibly adding into my portfolio. I wanted to show you what I look at so that you can at least hopefully take a few things from this and implement that into your own process. But I'll be happy to take any thoughts, any comments in the comment section. You guys are always very, very good with doing that, so please don't be afraid to ask any questions if you have any. I'll probably fund my account in the next couple of days. I'll keep you guys updated with how I get on. And I decide on which one of these three I'm actually going to go for. I've got a couple more questions that I want to ask and research and make sure that I'm okay with before I commit any money. And it's really important. You've got to bear in mind, guys, this is money that you're talking about here. It's all very well to get excited, but that's one thing that you have to learn to control. It's not about the notion or idea of earning a load of money. It's actually the reality of doing so and how you mitigate your risk in doing so. So therefore, it's all about research. It's all about understanding what you're doing. It's all about making a calculated decision, taking a calculated risk. If you're not doing your research, you are gambling. And nobody wants to leave themselves the chances of gambling, because guess what? The house always wins. But anyway, I hope you found that useful. Again, if you've not heard about the event that I'm holding on August 15th to 16th, it's a digital wealth conference, 2 days, 10 professionals, 10 topics. It's going to be amazing. I'm going to leave a link below in the descriptions for you to book tickets. We are raising money for a charity. The charity is called the Lifewood Academy, CIC. They work with young boys and young girls. They take them off the street. They give them a positive environment for them to thrive, and mentors to help them through difficult phases in life where oftentimes they're out there committing crime. And I really want to add value to the community. I want to do a good job, as well as providing you guys with financial literacy. We are covering things like how to tackle debt, how to improve your credit, how to buy your first home. There's going to be a guide on that. Generational wealth, that's a buzzword right now. What are the secrets to generational wealth? What is the one thing you can do that's relatively easy to be able to create generational wealth right now? We're going to talk about investing in the stock market, investing in cryptocurrencies. We're going to talk about investing in properties, how you amass a buy-to-let portfolio by just moving money around and using your money efficiently, how to start a business. We have a celebrity, we have Paul C. Brunson giving his tips from a very, very long career of being a very, very successful entrepreneur. The tickets are available right now. They are limited. So if you do want to buy them, again, the link will be in the description. But again, guys, thank you so much for watching this video. I will see you next Friday.